As always, this is Bloomberg Sound On. Thanks for joining us on the radio, on the satellite, and on YouTube. Search Bloomberg Global News. The cameras are lit. As Kaylee Lines joins us in the studio. I'm Joe Matthew in Washington. Covered a lot of ground there, Kaylee. It's always fascinating when these two take the deep dive, because it was everything from what we're covering here in Washington to, of course, the banking industry, and then back to everything we're covering here in Washington when it comes to regulations.
Absolutely. We know that banks like Bank of America are facing the risk of higher capital requirements. In part, this is a result of the bank failures we saw earlier this year. In part, it's because the Fed had been working on the endgame to tighten up a lot of these things. What is interesting is Moynihan said they actually already have enough if you look at their numbers from the quarter they just reported. But he did say he hopes that it will be changed. He thinks these new rules will curb competition overseas. Clearly, he, along with pretty much every other bank CEO that we've heard from, doesn't really like the regulatory proposals, but seems to be suggesting that if they indeed go through, Bank of America can handle it just fine.
So Nathan Dean is with us. Pretty good timing as well coming out of that conversation, and having witnessed what we already have. We should let everyone know, by the way, if you're just joining us, Jim Jordan failed in the first round of voting to be speaker, and we don't know when the second round is going to happen. That could be later today, Kaylee. Maybe it's tomorrow. We're
Anyone's
truly
guess.
figuring this out as we go here. And something that we're going to talk about with Nathan as well, Bloomberg Intelligence U.S. Policy Senior Analyst. It's good to see you, sir. Thanks for coming in on what I know is a very busy day for you. To Kaylee's point, to what extent is Brian Moynihan speaking for the industry?
Absolutely. I mean, he is speaking for the industry. I mean, we've seen the same statements from J.P. Morgan as well. I mean, this idea that the Basel III endgame proposal is going to raise capital requirements 19% in an era where, rates are high and the economic uncertainty and so forth like that. And the message from the banks is that we're already wide capitalized. Why are you doing this now? We've actually seen statements from moderate Democrats, and we've seen statements from certain policymakers that his concerns are actually bleeding a little bit more into Washington. And I think that the Fed is playing somewhat a little defensive game at the moment, because you talk about the Basel III impact on mortgage lending. You talk about tax incentives on climate change. This risk weighting of assets recalibration has a lot of unintended consequences that will come out of this. And we just saw this speech from Fed Vice Chair Michael Barr just last week defending the proposal. I think that defending is going to continue, and we're certainly going to see tweaks, I think, coming out of this, because they need this done next year, or else they run risk not getting it done at all.
So when Brian Moynihan said just moments ago, will it be changed? I hope so. You think indeed it is likely that there will be some changes?
Absolutely. I think there's going to be tweaks to it. Probably not enough to keep Mr. Moynihan and Mr. Diamond happy, but I think there are going to be tweaks to it. His point about how the Basel III endgame could push lending into the non-bank sector, well, that's something else the regulators have to grapple with, because I think that's absolutely what would happen here, maybe not to a material impact, but just to a small impact, and that runs counterintuitive to what the work over at the Financial Stability Oversight Council is doing at the moment. They're concerned about non-bank financial firms. So I think that there's this holistic review that the Fed has to take. They're getting all these comments here, and then eventually they're going to do these tweaks, because if you remember, when they put this proposal out, Jerome Powell did not give a statement that said, I fully agree with this. He gave a statement that said, I'm voting for this, but I still have some questions. And to me, that says those questions need to be answered.
Wait, there's a lot here to talk about. Does he strike you as a man who's worried about Washington? We seem like we're reaching new levels of, they're crazy, but they'll figure it out, to this might really be the definition of dysfunction.
So I actually had a chat with a equity strategist yesterday, and I asked this person that question, what about Washington keeps you up at night? And the answer was that...
How much time do you have?
Well, the answer was, in an era of crisis, I need Washington to be my mom or dad and to protect me.
Yeah.
And if I don't know that my mom or dad are going to be there to protect me, that worries me. It's not something that they can actually say that this specific, dysfunction is going to impact this equity or this stock or whatever, but it's just this general uneasiness. And that's where I think the investors are at the moment. Now, what my response to the clients is that, look, we don't know who the speaker is going to be. We don't know how this process plays out, but we do have a finite number of bills that have to pass between now and the 2024 elections. And those bills always get voted and passed with bipartisan support. Now, there'll be lots of pain to go through that, but ultimately, the economic impact of a shutdown, the 35-day shutdown under the Trump administration was $3 billion. So the optimist in me tells me that a lot of this is noise and the process may play out. The pessimist in me says, mom and dad's just not going to be there.
Yeah, or to put it in the
Wow.
words of Brian Moynihan,
Man.
anything that has the U.S. not be the most stable place on earth is not a good thing. And I think it would be a pretty hard argument to make that the U.S. is the most stable place on earth when we don't have a functioning
Mom
House
and
of
Dad.
Representatives at the moment. Mom's missing. Dad, maybe if you call it the Senate. One of the two. We're a single parent household at the moment. When we talk, though, about the shutdown risk you were just talking about, Nathan, even if Jim Jordan becomes the speaker, you say always these things ultimately end up passing in a bipartisan manner. And yet Jim Jordan doesn't really have a record of passing legislation in a bipartisan
I think it's zero. But.
Right. So I just wonder how that changes the risk in your view.
So Bloomberg News put out a great piece about Jim Jordan yesterday, and I'm going to steal their language. It said, activist, not legislator. And what we mean here is that if we get Jim Jordan and he's the activist speaker, you're in for a really long shutdown. Now, what does that mean? Well, probably for the first month or so, if this is November 17th, it bleeds into January 1st. I don't think the economic impacts are going to be all that great. If it goes into 2024, SNAP benefits are at risk. So if you have a grocery store exposure, that could be something to worry about. But also, please remember that Bloomberg News was also saying that, there was this idea of a clean CR that puts us into April, then the 1% automatic cuts. If the Republicans are united on that front, the shutdown threat is actually quite low, and then it gets translated to April. So there's different scenarios that can play out here, and the challenge is trying to predict them because I think they just decide on where they want to go on a moment's notice.
Boy, this, of course, could all change as the chaos spirals, right? We didn't expect to see what we saw today with Jim Jordan, 20, effectively no votes. Could be worse on a second round. Maybe we're feeling for a third or a fourth name at some point. Does that change the calculation?
Well, obviously it does in the long term. I think if you look at the immediate next steps, what needs to happen? Israel-Ukraine aid, the government shutdown. We've seen this idea of maybe Patrick McHenry becomes more of a speaker pro temp with expanded powers for 15-day increments.
You running odds on that?
No, because we're not there yet. I think that's something that's got to happen, later. But
can I put in as a client a request for that?
You can.
I would love to.
You can.
I know you're hearing from a lot of us.
Exactly. But, I think the bigger concern from the investment point of view is, okay, we've talked about Israel, Ukraine, government funding. What about all those other bills? I don't want to say they have a chance of passage, but there's this feasibility of passage that people are actually running, investment portfolios off of a specific bill. Think safe banking, think crypto. There's a technology data child protection bill out there. And so those bills actually get harmed the longer this dysfunction actually plays out, because then you run into losing the momentum, and then you run into 2024, an election year. And if this dysfunction continues, that election year mindset is going to speed up, because eventually people are just going to say, hey, I need to protect myself. I need to protect my seat. Let's start running for Congress again.